Good weekend, all. Ira Epstein, and here we are with your financial market wrap-up, and this is for Friday evening, and we're at October 27, 2023. Well, you know that the Mideast is heating up. The U.S. last night, 2 incursions on Thursday night. The U.S. got hit again with some bases. Now the question is, how do we retaliate to that? Israel is carrying it now a step further as they're going into Gaza, knocking out communications and a bit more of their show of strength. Not sure where that is going. The world wants to see a pause in all this. They're not going to get that from Israel. It can all end if Hamas, I guess, were to leave. That's one way. But how do you know they've left unless you kill them? That becomes the other. But if there were a corridor and they were agreeing to leave, that might happen. They can't be ruling that anymore. That's really what it's going to boil down to. At the end of the day, Israel's going to fight it all the way. As you can see, there's nothing left of sections of the city, but it's a big area there. There's plenty still left, but everything where they're going is getting destroyed, and it's going to be ugly, and a lot more deaths are coming on both sides. The problem is it's a tinderbox. Do we all get pulled into it? And that's really the question. The other thing is, how do we pay for all this? Because at the end of the day, we're paying a chunk of money for Ukraine. We're going to be spending now. We haven't spent anything in Israel that the War Acts won't let us go, but we're asking for billions more. I don't know where that all goes. Then we've got our war on the border, where every day illegal immigrants are coming in. Where's this all coming from? I can tell you, it's coming from you and me. It's coming with higher rates, biggest deficit. And now we have a new Speaker of the House where if he's tight and if he's really budget conscious, a lot of things aren't going to get done. The battle's now beginning for the real what? This is the battle now for the presidency. So the gauntlet is going to go down. You watch. That's what happens with something like this. And it's a whole new element that's going to come in here. Another man, I think his name's Mr. Phillips, he threw in, and he knows he can't win against the president, but any votes he takes away, the idea is another name, because a lot of people don't think that Biden is up to the challenge. I'm one of them. All right, I just happen to watch the man, and that's what I think. And I'm not talking age as much as how he's acting. I know guys that are 90 that are spry as can be. He doesn't look like, and I don't think he thinks it, and he makes too many stumbles as the head guy. I don't know who should be president, so don't you dare throw and say, well, it's Trump. Don't you dare throw that at me. I don't know who should be president at the end of the day. All right. So as we come in the market, we have been talking for months, maybe a year. Is the market going to come back and challenge the 18-month average of closes? It's hard to believe we got 6 points away from it. This is where the market could find its footing. I know you don't believe that as I bring it up. But if you understand how the seasonals and the cycles work in markets, other than the war, if we didn't have the war now, I'd feel very secure in what I'm saying. We have it. I don't know that wild card, but typically you come down here, this is where battles get fought. When we take a look at the S&P weekly, you can see how you're just down. You were down for the week another 2.5%. We're well off the highs that we've had here. We also have closed under the 4,200 level. So it opens up lower numbers if you want to go down there. Now, if you wanted to really get to be a fatalist, 3,800 is a possible number. From here, 330 points. It can happen. Next part, the trend is down, all the way down here. Did we hold that October 4th low so far? No, we haven't. So that time frame that I had where I thought the market would be good, in all fairness to me, there was nothing going on in Israel at that point. You've added this element that is scaring the heck out of people, and they're dumping things. When we take a look, normally I would have looked for the 100-week average to offer more support than it did this week, along with the Bollinger Band. That combination should have been it. Why do you think I just mentioned the 3,800 level? If you can't hold here and you start an acceleration at all, why not the 200-week average? You can argue with me all you want, but it's very, very possible. The reason it shouldn't happen is you're already oversold. You're not even close to embedding. I don't know the events, the exterior events. What we know we have this week is we have on Wednesday our U.S. Federal Reserve's monetary policy decision. The reality is inflation is still running. It is still stronger than they thought, and labor is still stronger. Therefore, from my opinion, and it will not be this way, I would have said the Fed should go a quarter point. What's the difference? The real market's there anyways. It won't happen because they're going to say they want to see things into December. Well, I'm not convinced that in December they're going to give you a Christmas gift of raising interest rates. That could happen. I've got my doubts about it. All right, so if they don't do it now, probably for this point right here, I'd be surprised. It could happen, but I'm not reading it. This is going to be the key. There's the market. We come in on Monday or Sunday night in futures and we go, nothing happened this weekend. We overreacted. We get a bounce, different things going on. I don't know myself. When we take a look here, you're oversold in the Dow. You're down to these numbers. You're in a support zone. I mean, you can't get away from that. You just went through the 100-week and the Bollinger Band. You did close under it last week, so it's not the first week that it's under it. Okay, this is the seasonal time of the year where the market looks for bottoms. If you go back, I think it's 15 years in a row, and on futures, if one were a buyer on the 26th of October, according to the Moore Research Center, and they came out on December 2nd, 15 years in a row, it has made money. Does past performance guarantee future performance? No. Was there an Israeli war? No. Were we threatening Iran? No. But there were other things going on. So you just don't know. That's what it comes down to. In the NASDAQ, breaking down. Now, I saw companies throwing out earnings this week because, I do my Spider ETF report that I thought were great. And you know what the reaction in the market was? Boy, they're not good enough. They missed on a cloud. They beat on everything else. We don't like what they did there. That doesn't make any sense. But that's the environment right now. The environment is everything is negative. We have a war. We're spending money we don't have. Interest rates are going up. That is the fear. The consumer is not tapped out yet. Durable goods are getting bought at a big pace. We keep hearing the death of the consumer. We're not seeing it either on the Red Book sales, other numbers, and yet the PCE numbers that keep coming out and the inflation are strong. They're not falling at a pace that's going to get the Fed comfortable, yet the Fed will say it's a lag. We'll see. In the Russell, this is the weakest, and I have been a big person here criticizing my peers that appear on TV, and they'll come in, no, this is the time where you want to own these. Okay, what's your time horizon? Because that's what you're dealing with. They're certainly not doing market timing. They're just saying, hey, they're cheap now, they'll get cheaper, we buy more and we keep getting more, and then they'll eventually in X period of time say, I told you so. If you can survive it, we'll see. In the 5-year notes, you just keep dropping down. You're embedded. Higher rates until this red line closes over 21. Higher rates until that number closes over 21. So the weekly charts are keeping you away from doing anything foolish on the daily charts and thinking, I should be a buyer. This is just still very bearish and hasn't changed. The dollar didn't do anything. Wouldn't you have thought that everybody'd run to the dollar on it this afternoon? I would have. When I saw the bigger forces moving in, the communications taken out in Gaza, first thing on my mind went, this is the big one. People are smarter than me. They didn't think it was the big one. It really didn't go anywhere. In the euro, we had a nice rally this week, and now it's faltered as they went into a hold pattern, as Ms. Lagarde is going to, she probably did exactly what we're going to see our Fed chair do. She just was ahead of him this time. And he's probably going to say just what she did now. We're making headway. We see inflation is slowing down, blah, blah. There's a lag effect. I don't know. But if it doesn't go our way, we will raise rates. We're still live. I've just given you what he's going to do. In the Canadian dollar, the trend is still very much in a downtrend. Are we going to embed here? So to embed, you need 3 weeks in a row where both numbers are under 20. We certainly are right here. We certainly are here. I think you'd agree with me that we're not. Are these numbers under 20? They're not. Let me follow this one. Week 1, under 20 is right now. You have an oversold market. Very hard to get short there, is my point to you. In the Japanese yen, I think you'd be very careful. We're going to have on the 31st, Tuesday, the Bank of Japan's monetary policy decision will come out. Each time they haven't done anything, and they might not again. The trend is certainly down going into it. But at some point, they're the only ones out there with a big negative interest rate. Be careful. They could throw something at you, and all of a sudden the market goes into an unwind. I wouldn't want to go through that report. Bitcoin. I told people this week, I think it was Tuesday or Wednesday, that I think it's time that you take something off the table. Why? You're over the Bollinger Band. You've already discounted that you're going to have some ETFs. Isn't that funny? ETFs, they're going to come out based on spot. And you'll say, well, that's a base and you're breaking out. And I'm not disagreeing. It may well be a base that you break out from. It absolutely looks like it, but it's still over the Bollinger Band. You only stay over it 5% of the time. So you take a portion of what you own off. If you want to bet that it's going to keep going, terrific. The trend's up, but you're overbought, you're over it. You're going to have to be like that for a while to see what it does. Now the differential. We've just spiked back for a while. Take a look at this. We just now, this is last week. Now the differential starting to grow of Brent versus WTI. That's not a bearish event. That becomes a more bullish event over time. Brent came down to its support zone. It's been working off present tense and overbought condition. We still have one of the numbers at 70, so it's nothing. However, the chart action isn't what it's about yet. Take out last week's high, the trade will, in my opinion, turn suddenly very bullish, looking for the market to the upper Bollinger Band at 97.82. What would cause that? Most likely something in the Mideast going crazy. That's what I would think. WTI, would it follow it? Probably, but you'd have to get over, on this chart now, 90.78 to make that one happen. Then in the heating oil market, I know you find this hard to believe because we're going to be talking cold weather and people want it. Heating oil at this time of the year is often bearish, not bullish. And if it's going to drop, I can make the argument into the 250 area here. You've got to get back over in this heating oil, 325.15 to convince me that the market's anything but a short sale. The 18-day average is 304.10. You didn't close under it. You closed above it, so you kept the bias up. But you're in a battle zone now between the 100-week and the 18-week average of closes. Now, I talk and write an awful lot on my thoughts on the marketplace. You might want my experience. I have been through Vietnam when I saw how the students were reacting to that war. And what do you think's going on in the colleges right now? It is the same as I experienced in the 60s. People get passionate, they get nuts. This time it's anti-Semitism, then it was we shouldn't be in the wars. I can go on and on as to what it does. But it's turmoil. And turmoil presents opportunity in its own ways, and it also requires some knowledge as to what to avoid. I will get it wrong, and I will get it right. It'll be both ways. Everybody is like that, but experience is what it's about. And it's not only me, it's our firm. We have people that are writing, that we've been around the horn, we watch it. We know what how do I put it? It's not that we know what we're doing, we've got experience in this. That's what you want in something like this. So I'd like to give you my newsletter for free. Give it a try. What do you have to lose? All right, go to iraepstein.com. How do you do it on the website? It's right there under free offers. Move your cursor up here, and we'll throw in our morning subscriber videos, both the SPDR and the ETF. You see if it makes sense to you. I can tell you that one of the trades I've got my clients in now is long GLD at this point. We'll see if it wins or not. It's looking okay at this point. I'm Ira. You take care.